Good. Anything you want, I'm sorry? Anything you want to add for making this crowd more wise or happy?
Yeah. Who of you thinks that it's a tough job creating a startup? Okay. So here's the good news. It's much easier than it used to be. You will not believe how much easier it is. First of all, I know you're not going to believe me, but there's a lot of money lying around. And it didn't used to be like that. And in today's economy, you can get everything off the net. So you have the cloud and you get the net and you don't have to buy computers and you don't have to create a lab and you don't have to create hardware.
Is much cheaper.
So the cost of entry, somebody told me that in the last 10 years, the cost of starting a company on the IT side is down by 90%.
So what kind of news it is for the VC industry? Bjorn, while we are talking, can you come please over here? We need you, Bjorn.
I think that the VC... Hi.
Grab a chair. He can do it alone.
So I think just to... Hi, Yoav. I think the VC... Just to give you figures, in Israel we invest about $2 billion per annum into startups. About 1.5 of that is done by VCs, so it's hard to live with them, it's hard to live without them. And about $500 million of that is done by others. And the others could be anything from angels, family, friends and fools, corporations that want to somehow invest in new technology, and all sorts of different types of growing forms of financing. And I think the good thing is because of the fact that the cost of participation in the industry is coming down, we're getting to a more pluralistic, democratic approach to financing. We're seeing more individuals participate. You know, until 4 years ago, an average angel was usually putting in between $25,000 to $50,000 per deal. So we now see mega angels that are doing 10 times this much. We got crowdfunding coming from the net. There's a new law that's about to be passed in Israel that will expand that just like in America. So if you're a VC, you have to now live in a world where there's a much more diversified portfolio of financing tools for the different types of animals that exist in our jungle.
Who today or yesterday heard Bjorn? Raise your hand. Not many. You already were on stage or not?
I was yesterday morning.
Yes,
yeah.
so where all these guys have been?
we were in a side panel, so not in the main hall. That's
okay, now you're in the main hall. This is your 15 minutes of glory. So who are you? Can you tell us who are you?
I'm Björn, and I'm running a company called Compass, and we have, among other things, done something called the Startup Genome Report, a startup comparing ecosystems globally, and Tel Aviv came out first after Silicon Valley, which is one reason why I'm here. And we were really inspired by this global explosion of entrepreneurship and seeing all of these startups popping out of the ground all over the world, and also seeing that the vast majority, or that most of the job growth, specifically in the US but globally, came from those high growth companies. Most of the economic rejuvenation came from those companies, but also seeing that most of these companies fail. And the reason why they fail is not because of competition, but mostly because of self-destruction. And the self-destruction is caused by companies very efficiently executing the unnecessary. We as a company set out sort of trying to reduce that failure rate, maximizing the success and helping more businesses around the world to be successful, including here in Tel Aviv. And as part of that, we have built a tool that is called Startup Compass, or right now just Compass, which is a sort of a digital advisor that you can feed your marketing, sales, financial data into, and it gives you benchmarks and advice on how to make your business more successful. And as you're using this tool, we are also using your data in order to create reports such as...
I want to translate to English what he said. First of all, anybody in the audience who is creating startup, want to create startup, invest in startup, planning to invest in startup, raise your hand. Okay, now listen to me carefully. You cannot get a better insight to the parameters which affect the success of a startup than going to his site. I am doing investments and creation of startups since 1969, and the amount of insight that I get or verification of things which I thought or telling me that I was wrong is amazing. If you want to know what is the best number of founders, if you want to know how many pivots is optimal to allow a startup, if you want to know whether VC add value or don't add value, if you want to know the role of mentors, go to his site. And the interesting thing, that if you want to know if you should raise a lot of money or little money, in the beginning go to his site, and many of the things you will find are counterintuitive. Some you will find that they are right, and some you will find that are counterintuitive. Bjorn, how many companies did you study before you reached these conclusions?
Well, now we have about 100,000 companies, but when we started off with, we started off with 50 companies, and then
50,000, you mean?
Well, for the ecosystem report, it was 50,000.
Yeah.
And we have a few other reports that had, we had less companies, but yeah, a lot of companies. We looked at a lot of companies in order to create those outputs, and you can find it at blog.startupcompass.co. You can download the different reports and get all of your insights. So
good. Now the last, I'm sorry?
The site is blog.startupcompass.co, or you can just search for Startup Genome Report or Startup Ecosystem Report, and you'll also find it.
And just to share with them a little bit of the insight, what is the optimal number of founders?
The optimal number of founders is 2 or 3.
What is the optimal number of pivots?
The optimal number of pivots, it depends actually, and we can go more granular.
Just tell them a number, they cannot check you anyhow.
So depending on the type of company, okay, can be anywhere between 1 and 3 pivots. If you don't have any pivot at all, okay, you're not listening to the market, and there's probably something wrong. That's most of the time the reason. And if you pivot too many times, you probably don't know what you want to do. So somewhere there's that sweet spot of pivots.
Raising a lot of money in the very beginning, or raising little money in the very beginning?
It's better to raise less money. And there's a number of different reasons for this. One is that as you raise more money, there's more commitments that you make. There's sort of a pressure to scale, what we call scale prematurely. So you start to over-engineer the product. You start to try to acquire a lot of customers before you actually understand, what your business is about, what your product is about. So raising less money will lead to more success, typically. Yeah.
Perspective. It's wonderful what you're saying. As a VC, I used to be in industry. I'm in venture capital now, which means nobody likes me anymore. But one of the things we do try to remember is ultimately you cannot be a successful VC without good, strong entrepreneurs, because it's the entrepreneurs who make this industry happen. And we help, we participate. Sometimes we shout and cry, but at the end of the day, the bloodline of the industry is entrepreneurs. And one of the things we as a venture capital fund always tell them, raise as little as possible. Because one of the things, it's not just the efficiency of the use of capital.
I'm not sure that you are right, because your management fee is tied to the amount of money you invest, not to the amount of money you make.
But you can ask the people who've been to see me and you'll get the story. So I stand on this background. The point is very simple. For a company to be successful at the end of the day, you still need the founders to be on the team. It's very hard to move from founders to managers and be successful. In order for them to be on the team, they need to be motivated. In order to be motivated, through good times and bad times, you need to make sure they have enough skin in the game and enough equity. And the last thing you want to do is to dilute the founders too early, too much. And that goes back to don't raise too much capital at the beginning, and because at the end of the day, I believe it's good for everybody.
There is another problem on raising too much money, and this is you raise too much money, you spend it, you create humongous burning rate, which you have no chance to break it even in short time. So you go into losses. Going into losses means that you don't have enough finance or you have sick finance.
There is a law in physics, Newton's fourth law, which says that no financing round will last more than 24 months. So no matter how much money you raise, it will never last more than that. That's a law of physics. So hence, less is more.
Good. And Bjorn, before we close the panel, we want to get your insight why we have so many startups. What's going on in this country? What is the secret to this hyper activism?
There's probably two components to this. I think the first one on the high level, we are going through something that John Hagel, who was at the DLD lunch, also called the big shift, and it's essentially a big socioeconomic structural shift where what we will see over the next 10 to 15 years is that half of what today is service industry will be moving into software, which means the area where today the vast majority of value generation is happening will be moving into software, which is a big opportunity. So we'll build software that will replace or amplify lawyers, accountants, doctors, teachers, all of these jobs within a service space. Now, why is Tel Aviv so successful? I think there's a lot of different components to it, but at the core, and other people before me mentioned that is, it's about people, it's about the talent, it's about how the talent collaborates and works with each other. And Tel Aviv has an amazing, combination of talent from all around the world with different kinds of backgrounds that are very well educated and that have a common identity and work together and are plugged into a global ecosystem and work very well with especially Silicon Valley and New York and Boston. And hopefully in the future also the European ecosystems closer together. So I think that's the second component. Yeah.
Ladies and gentlemen, Bjorn Harden and Yoav Chelouche.